Hello traders, welcome back to another video, and then in today's video we're looking at NZD and gold. Obviously gold has to be on my charts just because gold is my most favorite pair, guys. So without wasting any time, we're just gonna get into the charts, and before we do that, guys, I'm just gonna show you Blueberry Funded and show you all the accounts that they offer, just because I currently have a 50k account with them, of which it's a two-step account, and then you can just check them out using the link in the pinned comment and in the description below, guys. So without wasting any time, we're just gonna dive over to the Blueberry dashboard, and then after that we're just gonna dive into NZD and gold, guys. And I'm very excited just because I've seen a lot of opportunities for this week, just because we came from a long weekend. So we're just gonna get into the markets and smash each and everything that is being offered by the markets, guys. So let's not waste any time and get to the chat. Okay, guys, before we get into the analysis, let's look at the website on Blueberry Funded. Then I'm gonna log into my account so that you can see it, even though I didn't start trading, but like I'm just gonna show you so that you can be updated whenever I drop another video based on Blueberry Funded, guys. So this is the website, as you can see. And then the most important things whenever you're looking at a prop firm, you need to look at the trust pilot. Then you need to see if everything is above board, guys, just because most prop firms do not pay out. But like when it comes to Blueberry Funded, you can see that everything is above board, everyone gets paid. But like you need to be looking at the finer details and the important stuff when it comes to prop firms, just because if you miss like any information, then you're going to have a big problem, guys. So as you can see here, they have the one step, they have the two step, they have the rapid, they have the stock account. So most of the time I like to use like the two step. So this is a 5k account, as you can see, and then the criteria is two step evaluation. Obviously phase one they need 10%, phase two they need 5%, guys. Now max total loss is 10%, daily loss is 5%, profit share is 80%, max drawdown is statistic, daily drawdown type is higher of previous day equity balance, guys. So it's based on balance, guys. As you can see right there, the leverage is 1:50, and then evaluation minimum trading days is 3, funded minimum trading days is 3, payout frequency is 14 days, account copy trading is allowed, and then prohibited trading strategies, as we can see right here. You have to check like each and everything before you can get into the prop firm space. So gambling, guys, excessive scalping, for those who use like high frequency trading or the way that I scalp using gold, it's not allowed, guys, on prop firms. As you can see, mentangling is not allowed, holding 5 positions simultaneously in drawdown on the same pair, guys, as you can see right there. And then all in, it means that you are risking like each and every amount that you have on the account, guys. So you shouldn't be all in. Grid trading, placing multiple trades at predetermined intervals to create a grid-like structure with no clear risk management. So you need to make sure that you use risk management. Excessive scalping, like I said, a trader executes 60 trades with 35 of them held for less than 45 seconds, guys, of which this is not allowed, as you can see right there. So you need to see that, you need to know that some things are not allowed when it comes to trading prop firms. So this is one of them. So make sure that you are not scalping on this account and you are trading very nicely, guys. So let me just close this thing here, and then let me show you the accounts that they have also. So the 10k, or the amount of the 5k, so this is very cheap, $35, guys, very cheap. And then they use MT5, obviously, or platform 5. And then they have the 10k, as you can see, of which it's $60, and then they have the 50k, of which that's what I have for around $250. Then the 100k is $500, and the 200k is almost $8,000, guys. So you can obviously see that the prices are very reasonable, whereby you can start with maybe a 50k account. It's very reasonable, and then you just have to pass your account very nicely without breaching any of the rules that I have already mentioned right there, guys. So let's log into the dashboard so that you can see what's going on my dashboard. Like I said, there is nothing much on the data side, just because I haven't started trading, guys. So let's get into it. So as you can see right here, this is my MT5 two-step phase one account, guys. It's still at 50k, of which it's okay just because I have setups that are in play that I'm about to show you on the charts in a few minutes, guys. And then if you watched up until this far, make sure that you drop a comment below commenting blueberry, guys, to show that you've watched up until this far here. So as you can see, we're already at the 50 bucks. And then they have withdrawals, certificates, competitions, contracts, whereby whenever you pass your evaluation, you get a contract here, you sign it up. And then this is the order history. I don't have any order history. They have the newsfeed, the affiliates, they have the economic calendar, they have the we trade, and then these are other things that they offer. So the layout is very simple and straightforward, as you can see right there, guys. But like, I'm just gonna keep you updated on Blueberry Funded during the course of the week if I get like good setups. So without wasting any time, guys, let's get into the trading analysis for today so that you can get to see what I am looking at on the pairs that I've already mentioned by the start of this video here. Okay, guys, thank you for joining me on the charts. And then we have NZD and gold. Obviously, most of you guys are interested in trading gold, of which that is a good move whenever you're trading gold, just because it's trending nicely to the upside. You just need to get like those final details when it comes to trading SMC, then you are good to go. You can take your buys and flip your accounts very nicely, guys, of which flipping accounts is not necessarily advisable. You just need to use like a lower amount of money or a lower capital so that you can flip your accounts, guys. So previously, as you can see here, the market was pushing down, creating lower lows and lower highs. As you can see from this point here, we had a lower high here, lower low here, lower high, then we had a lower low, then we had structures pulling up into areas of interest. As you can see here, we had a higher high, higher low, and then we had this lower high here. We didn't break the previous structure. Let me make sure that we broke the structure or not. So as you can see here, we created some type of a wick creation. This is not a body close above, so this was just a wick creation. Then we created a lower than this point, then we had a lower high, lower low around that area right there. So the market was starting to push to the downside. So just like this, we had a change of character within this area here. So let me just draw the previous structures very quickly. So break of structure right here, and another break of structure within this point here. And most of the time, guys, you'll have like areas of interest, like maybe at the top of the structure. As you can see, if you can just extend this thing, you'll obviously see that these are equal highs. So that is why the market tapped into this area here before pulling to the downside, giving us a change of character, of which is a realignment, and then continued to push down. So this was an outer structure break of structure right here, or this is a swing break of structure. So after even that break of structure, you can obviously see that the market started creating those smaller structures right here. So this is another valid break of structure around this point. So after having that break, you already know that this is your lower high right here. Then we have a lower low around this area here. Then this is your lower high. Then this is your lower low right at that point. So the market was pushing down very nicely, guys. Most of you guys would have taken sells in this case, just because the market is showing us that it's selling, guys. Now, so after that, we had a change of character, of which it's this one here. So after even the change of character, most of you guys can get confused as to where is your lowest point and your highest point. So this is your lowest point, guys. Now, that is your lowest point. Then you need 3 candles to have a valid pullback. So as you can see here, we had this one, and then the market started trickling in this area, created the second one, and then the third one was a bit small. So which means that this is your highest point, and then this is your lowest point. So that is your trading range. Then we use the fib tool from the low to the high. Obviously, then you can see that the market mitigated into this area of interest around here. So tapping into that area of interest, then the market pulled to the upside, giving us what? A break of structure just around this point here. So that is how you need to map out like your overall market structure. So we had a break. Then after even the break of structure, we already know that we are starting to look for buying opportunities, maybe at an area of interest around here. But like that did not happen just because the market did what? It gave us a change of character again, of which it's this one here. As you clearly notice that this is our low, then this is our higher high right there. Then we had a change of character in this area here. So that change of character gave us another confirmation just because the market is pulling to the downside. There is no need for you to be looking for buying opportunities. What you need to do is take your Fibonacci tool from the high of this movement up until the low, of which it's this one here. Then you can already understand what's going on. But like for you to understand what's going on, you also need to map out areas of interest. So as you can see here, we had equal highs, of which that is liquidity. Then after even that liquidity area, you can obviously see that we had a supply area, of which it's sitting nicely around that area right there. Then if we look at the top of the structure, you can obviously see that we had a fair value gap here. Then we had this area of supply at the extreme. So I'm just going to draw out like this area of supply at the extreme. Then after that, I'm just going to map out this area of imbalance. So this area of imbalance can be of use just because the market tapped into it. So looking at the lower time frame, we're just going to look for areas of interest again, just because there are a lot of areas of interest that we need to be focusing on before we can take any entry on this trade here, guys. Now, so looking at the structure, you can obviously see that we can refine our zones like this one here. It can be refined to this one. Then you can clearly notice that we have a fair value gap around this area here, of which it needs to be filled. This imbalance here needs to be filled. So what you need to understand is that the market is still pushing up. There is no change of character, and then we need a change of character. Let's say, for example, we break this low here. After breaking this low, we already know that we had a change of character, and then already the market tapped into an area of interest. What you need to do now is wait for this type of movement to happen, then you can sell into this market here. But like since that did not happen, we are just waiting for what? For this type of pattern to happen right now. So we can just move these things back here. We need the market to fill this imbalance here, tap into this extreme supply zone. So that can happen just because the market is still in an uptrend. This is the current break of structure right here, just like that. So this is the current break of structure. Then the market is still at this fair value gap here, of which is this one here. So this fair value gap has been mitigated, and then we also have this area of demand here. So what I'm anticipating for now is for the market to pull up into this area of interest right here. Then that is when we can get some type of a change of character. Then that is when we can get to sell NZD CAD, guys. Now looking for more downside up until this area of interest here, just like this. So this is what I'll be looking for on NZD CAD, guys. Nah? And then you can just drop a comment of what you think about NZD CAD. Are you going to trick the setup, or you're just going to sit on your hands up until the market forms up maybe more structure so that you can get to take advantage of the trades? But like this one is very good. I'd like to take this setup here. But like I'm just going to wait up until the market taps into a very, very valid area of interest. But like at the moment, we are still in a good area. I'm just gonna wait and see if we pull up, or we're gonna change character from this point here. So those are the two scenarios that I have. Are we gonna buy, or are we gonna change character so that we can sell? So looking at gold, obviously gold, guys, has been analyzed. Gold has been analyzed, obviously. So looking at the 4-hour, guys, before I forget, nah, let me just show you the market structure. So market structure moves like this, nah, like this. I'm not going off topic, I'm just giving you like an illustration of what's going on. So market structure moves like this. Sometimes it can just give you a pullback whereby it reaches the 0.5 level, tapping into an area of interest, and then it will pull up. It's not gonna go deep into that 0.5. Let's say maybe this is your lowest point, and then this is your highest point here. Then the market will just pull back into that 0.5 level and then pull up. But as long as it's below that 0.5 level or at that discount area, you can start buying, guys. Now, so that is how gold is moving at the moment. It will give you like a large structure like this, this large structure here from the low to the high, it will be a big structure whereby the market taps into that 0.5 level strictly to that 0.5 level, of which sometimes there can be an imbalance right there. Then that is when the market will pull to the upside. So most of the time you need to be looking at how the market is moving, then that is when you can get to react to it. So let me just show you on the 4 hour of what I'm talking about. So you can obviously see that this is your high, né? This is your high, this is your low right here, and then your high at the moment, it's around here. It's not this one, guys, it's not this one. You can obviously see that this is not a clear pullback, so it means that this is your high point around here, and then this is your low point around here. So this is a big structure, to be honest. This is a very big structure. So most of you get caught up in this noise here, whereby you think this is structure. This is not structure, guys. The structure is here. This is the structure. This is your high, this is your low, this is your high, this is your low. Then the market is creating a new high of which it's at the top of the structure. Then we need for the market to pull back into some type of an area of interest before we can look for buying opportunities. And most of you guys get confused as to why do I like to scalp gold. So scalping gold is a very good thing for me, just because I know that the overall trend is to the upside, but like taking sells within this point here, or buy to sells in this point here up until an area of interest, for example this fair value gap, will give me more capital than whenever the market reaches this point. I have a lot of capital to swing this overall trade to the upside. So that is how I basically trade, guys, nah? But like the inner circle is available for those who want to learn a bit more on how I trade gold, nah? Just because I'm not gonna reveal each and everything that I use on one video, guys. It's gonna take a long time. So as you can see here, we have a break of structure. This is our low, this is our high, so it means that this is our trading range. So the market has to break this low before we can start looking for selling opportunities. But like I said, you can take short-term sells within this point up until the market taps into an area of interest, guys, nah? So as you can see, from the low to the high, this is your highest point here that has to be taken out, nah? So I'm gonna use an X on this one here. So this X, and then this is the low here. Just gonna use an X again. So from the low to the high, you can obviously see that the market tapped into the 0.5 level. Let me just use like this high here, this low to this high. You can see that we tapped into the 0.5 level, of which it stands nicely into the fair value gap. As you can see here, this is your low, and then this is your high around here. So the candle low and the candle high do not meet, which means this is a gap, and then the gap is called a fair value gap, or an FVG, guys, nah? Or an imbalance, however you want to call it. So this is the imbalance that I was talking about. So on the lower time frame, that is where you can start looking for buying opportunities, either it being confirmation entry or a risk entry, whereby you just use this area here of supply as your stop loss, just because you can just enter trades within this area here. Stops can be just below here. I don't know if you have like a small account whereby you don't know how to manage that small account, and then at that point you have the highest leverage on that account. So that's a recipe for disaster, guys. But like this is the way that you should be trading these markets, guys, nah? So currently we have a break of structure around this point. So that break of structure confirms a lot of things. As you can see here, we're still waiting for a clean pullback. So this is not your pullback, guys. This is not a pullback. This is wrong. This is wrong. I won't lie to you, whereby you think that this is a break of structure. If someone tells you that this is a break of structure, tell let me just avoid. If someone tells you that this is a break of structure, just be quiet, guys, and leave him or her. It's because he or she is giving you problems when it comes to trading gold. So you can see that this is not structure, né? So I'm just gonna leave that. So from the low to the high, for example, this should be your area of interest. First area of interest, this one here, this fair value gap here. Then the second area of interest should be this order block here, or the demand zone. And then the other ones should come after. For example, we have a fair value gap here, We also have a fair value gap here, but like gold will take time for it to reach like this point, just because it's a bit corrective whenever it's pushing to the downside or giving you those corrections. It's a bit corrective, but like whenever it realigns with the trend, that is when it will push very impulsively. So those are the two areas that I have so far for the week, guys. Now these two areas, the imbalance and the area of demand right there. So I'm just gonna remove all of these here at the lows, just because they make my charts a bit dirty. So I'm just gonna remove those here. So we have a trading range, guys. Now so from the low to the high, that is our overall trading range. But like, since we don't have a confirmed pullback here, I'm just gonna remove this thing here, then we can move over to the lower time frame, né? So the 15-minute. So on the 15-minute, as you can see here, the market is pushing to the downside, obviously. As you can see here, we had this as our high, lower low, lower high, lower low, lower high. Then we had a lower low. So the market is already at this area here. So since nothing is confirmed at the moment, I'm just not gonna participate in gold at the moment. I'm just gonna wait and see if we follow this overall downtrend into the areas of interest, guys. Now, just because this is internal structure, and then the internal structure has to reach where, into areas of interest, before we can start looking for buying opportunities. So this is the overall idea that I have on gold. Then if you have like something going on the side, you can just drop it in the comment section. But like, this is how I'm looking at NZD and gold, guys. And obviously I'm just gonna do a trade recap, whereby if you didn't watch this video up until the end and then you're skipping through the video, you're not going to understand what we talked about. You're just gonna watch recaps and then say, ish, I should have taken this trade, I should have watched this video up until the end, just because this guy is dropping some gems, whereby I would have passed my phase 1, I would have passed my phase 2, I would have made 10% so that I can get payouts and this and that. But like, make sure that you subscribe to the channel and click the notification bell, just because we obviously drop gems here, so that you can break these markets, guys. Now so as you can see right here, this is the overall trend on gold, and the anticipation, it's not that confirmed as of yet, just because I'll be looking at the bigger picture. But like, as for scalping, I'll be scalping the trade, just because I know what I am looking for. I'm looking for this to happen, this, simply that. Let me just do this, remove this here, then I'm looking for this type of formation to happen. Tap into area of interest, change character, then we buy. So that is the overall idea that I have. There's nothing much, there's nothing more, simple and straightforward. So yeah, guys, see you on another video. Make sure that you check out Blueberry Funded using the link in the description below. Make sure that you copy yourself an account and then start trading with the best prop firm out there, guys. Now see you on another video. Peace and love.